A new Fed survey says Americans are expecting inflation to last through next year, stretched thin by higher prices. More shoppers are turning to buy now, pay later companies. Klarna is such a lender. It partners with merchants and vendors to let companies pay in installments. The Swedish fintech's valuation soared 330% in less than a year. Makes it worth more than Deutsche or Barclays. Now, Sebastian Siemiatkowski is the CEO of Klarna. He joins me now from Stockholm. The growth has been phenomenal. I guess, I'm sort of the harbinger of doom here. You've got to be careful now, haven't you? Because with recession and economic times, people will take on debt they cannot afford and what they think they can do, even on your pay in 30 or 30 days and going into interest, before long they can find themselves in trouble.
True. Now I have the fortune, I've been running this company for 17 years. So I did actually run Klarna during the last financial crisis in 2007. And we did learn a couple of good lessons from that environment. And I would say that one of those was that we do very different underwriting. We do underwriting per transaction, not on a limit basis. We do it in real time. We never lend people cash. And actually, if you could look at our losses, they're 30-40% below credit card industry standards. We also have to remember here that we are, in essence, from a lending perspective, a factoring business. We turn around our balance sheet 12 times a year. And if we change our underwriting methodology today, in 2 months, 50% of our balance sheet is underwritten by the new. So we have a level of agility that you don't find your traditional bank have, which is very, very different. And I think that's some of the strengths of our business model.
It's an ingenious system where, what change do you think you're going to introduce over the next few months to account for what will be, because in some ways the next year could be very, very difficult in terms of recession. From what you've learned, what will you now change further?
Well, I think that, we really think of ourselves as a payment network of the future, much better than we are a third-party network, not a four-party like Visa and MasterCard. That gives us an ability to innovate much faster because we can basically roll out our services to 150 million consumers through a direct relationship. And if you look at our network, yes, people talk, it's very much associated with credit, but actually 40% of our volume is debit. And we have much tougher rules on credit on our network than you would find for credit card products. This is, again, why, as I mentioned before, and I think that part of this also is that our product is not built on the concept of trying to get people to borrow as much money as possible and charge the highest possible interest rate. It's clear, it's installments, you're supposed to pay off, there's no fees for consumers associated as they pay on time. And as I said, it's very short lending. So as a consequence of that, actually, we don't, that just drives much lower losses than you see.
Are you, as the regulator in the UK is getting more involved, as you're obviously aware, and you're now reporting certain things to the various credit rating agencies, are you worried that the regulators are going to clamp down's a horrible word because it suggests sort of snuffing out, but you know what I mean, that you're going to receive, let's put it in a posh language, you're going to receive greater regulatory attention, and that will have adverse consequences for you?
Well, I think that any new product in this space is getting more attention and should get more attention, right? Because in essence, we are still providing credit, and with that comes a level of responsibility. Now, you have to remember, we are a fully licensed bank in Europe, so we only do adhere to all the regulation. There are a specific subset of our products that fall outside of what's currently regulated. And we've even said to regulator, let's regulate. What I think fantastic about the UK regulator is that they're really focused on being outcome-based rather than too prescriptive, and that they're thinking in a proportional way about this. And so I want a little bit more regulation in this space because I think it makes sense. But I think at the same point of time, the banking industry has been protected by these regulatory protections, and that's created very poor competition, which is why we've seen too high profits. So I think the balance here is, how do we keep competition in this space, promote competition, but at the same point in time, protect consumers from bad practices?
Excellent, sir. We'll talk more. I'm grateful that you came on today to talk about it. Thank you very much.